Dr. Rajiv Kumar, eminent economist and now member of the RBI board, joins in to analyze these numbers. Thank you so much, Dr. Rajiv Kumar, senior fellow at CPR as well. Firstly, how are you reading this data? Do you honestly believe that the economy was completely unscathed and this exercise of demonetization had no impact whatsoever on growth? Does that even, in any way connect with what's being felt on ground across sectors of the economy?
Surely the economy has taken a toll, but the first point to be made is that the prophets of doom and gloom have been proven completely wrong, and I specifically point to the people who, and including the former finance minister, Mr. Chidambaram, who had said that this is a loss of 2% of GDP, and this is a step which has been taken, and which is going to cost India 2.3 lakh crore, etc. I think they should now really reflect upon what they have said and to some extent express contrition. That's the first. The second point, of course, is that yes, the real economic activity must have taken a toll, and this would either be shown up with a lagged effect, going forward, as demand does not rise to the extent that it should, and second, that this is a once-off effect that is being reflected in the GDP numbers, because the informal sector has now come into the formal sector due to the demonetization, and therefore the tax returns and the retail trade, etc., have shown a faster growth than what they would have otherwise shown. That 40% of the parallel economy which is out there, has some parts of it has been brought in, and that is reflected in the higher numbers. But it's a once-off change and not a change that you can take for granted going forward.
Now, Dr. Kumar, there's been a sharp revision in Q3 FY16 data, and the fact of the matter is that the revision on this data, and if I may say so, the real data will be known only in January 2018. Isn't that worrying? Do you think come January 2018, we could be looking at a very different figure, given the credibility of the data that's being put out by the CSO?
No, it is of course baffling. It has been baffling since January 2014. And a number of us have been saying that it needs to be rectified. And the CSO, I had thought, were committed to producing the batch series by June 2015, but they haven't done it. And I think it is the primary duty of this government. It must be something that they should take on urgently to try and rectify these numbers with the previous series, etc. Because these numbers would make policy making extremely difficult. On the one hand, it will give a different signal to the RBI for its monetary policy. On the other, it will tell the government that all is hunky-dory and they don't need to do anything, but which is not, because we know that there are job losses and employment is not been expanding at the rate it should, and the private investment is in negative territory, gross fixed capital formation is not good. So I think these numbers are baffling and need to be corrected. The sooner the better.
The question that we were asking a little while ago on gross fixed capital formation, how can that be higher at a time when demonetization was underway? Does that sort of add up when we've seen quarter after quarter of contraction in gross fixed capital formation, and then suddenly the one quarter when it should have shrunk even more is when we see some sort of expansion? Is that perplexing to you?
I can't believe that. Again, I'll have to look at the details of it, because gross capital formation has two components: the public sector gross capital formation and the private sector. It could well be that the government has done huge amounts of extra public capital, public capital spending, and therefore, it might have over-dominated the, decline in the private, gross capital formation. But again, on the other hand, if there were some projects which are going on in the parallel economy, which have suddenly been brought into the formal economy, there you go. I mean, it could well show up as private gross capital formation having turned the corner from being negative in the second quarter to being positive in the third quarter, because we know that there are projects, in manufacturing and in real estate and in construction, which are often taken up in the informal economy. Now, if they get, reported, if they are brought into the formal economy, this is a once-off change that you could have had.
Dr. Kumar, now that you're on the board of the RBI, I can't ask you very specific questions on policy, but I should still take my chances and ask you, what kind of a signal should the central bank pick up from this data? Because if this data is anything to go by, we're really in the pink of health. There's nothing wrong with us. And empirically, I don't think the Indian economy is doing very well. How should the RBI be scanning through this data, if I may?
Yeah, but the other signal that the RBI should also pick up, and this is entirely a personal view, which is that it's also not time for you to raise rates, because going forward you would expect food prices to decline further on the back of a wonderful performance in FY17 and a likely bumper crop in Kharif FY18. So therefore wage goods costs would be coming down, and therefore your inflation target would be easily met. So the upside risk on inflation, I suppose the MPC would consider to be not that high. And the RBI also should now be working much more on improving the transmission mechanism so that the excess liquidity that commercial banks have is not just blocked in there because of their reluctance to lend due to the very high non-performing assets, but the credit flow to the industry starts, and the lower lending rates are maintained by commercial banks.
All right, Dr. Rajiv Kumar, thank you so much for taking the time out and joining us with that perspective on India Tonight this evening.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.